Some think this young woman's small tailor shop only works with cloth and thread. Little do they know, something greater is quietly being pieced together.
Thank you. Kongsi. Bye-bye.
Girls, let's pack.
Boss, actually there's another job.
What? How can we finish it in time? Who is it for?
Oh, my best friend.
Boleh je. You go now and enjoy your reunion dinner. Go.
Go. You can come back tomorrow.
Silap-silap kita ni orang yang last kali rushing for Chinese New Year.
At least you got salary and job, ma. No complain, lor.
Less talking. Faster finish this lah. And don't forget, once this is done, we still need a design that can represent all of us, you know. We can make it, right? It's Chinese New Year, you know. This is so heavy and muddy. Why do you always pick the lotus?
I remember when I was a young girl, my mom told me that the lotus is a lot like women. Kaini, Maru, Amay.
Bos, ingat tak masa tu? Ada tak mampu nak bayar rental rumah. Tapi you datang.
Why don't you come work with me?
You showed me how to live with dignity.
I telah cakap berapa kali, kerja biar tak boleh bawa anak, Ma.
You can speak up for yourself.
There was a time I honestly didn't know how to continue living. It was you. You told me everything was going to be all right.
It'll be okay. Come, follow me.
And that has carried me until today.
We made it for you, the lotus. Because it was you who told us that the lotus
Doesn't choose easy water to grow in.
Even when it grows from mud,
It keeps its beauty, untouched by what tries to hold it down.
It is you that reminded us, no matter how difficult things become, you don't lose who you are.
Thank you, everyone. In the end, the greatest wealth is knowing our true worth.
And that is the story of this young woman's small tailor shop that has been quietly helping hundreds of women piece their lives together again.
Right, morning all. Welcome back to Morning Kappa at 8. Aiman here. So if you look at the S&P 500, well, it closed lower on Wednesday's session as the tech stock faced heavy selling led by 70% drop in AMD, which triggered the risk-off wave across the semicon sector. Now, if you see here, NVIDIA, Micron, Sandisk all experienced a sell-off, and Sandisk experienced around 16% drop in recent session. So I think investors also moved to sidelines ahead of Alphabet or Google and also Amazon earnings, while weak economic data added to the cautious mood. So, yeah, I think expect a volatile opening today, right? While the main session was red, I think watch the for potential rebound in tech as the Google reported better than expected earnings after the bell. So which also might come the fear sparked by the AMD, right? So looking at our US trading stocks that we have published overnight yesterday, right? So we have GE Renova, stock code GEV. So the stock is the stock experiencing a breakout at this $780 level. So now we can expect that the stock to travel towards this $840 level on a strong momentum, followed by the next resistance at $900 level. So now if the counter reverse lower below this $720 level, this could indicate an initial trend reversal signal. Also, next we have Chevron, stock code CVX, right? So look at charts now. I think the counter charted higher high market structure, forming a high-low formation, reaching above this $175 level, eyeing towards, eyeing to reach higher towards the 185 level. So if the stock climb up higher, we could see that it might travel higher towards this $195 level. Now, if the stock to slide lower, I think below this 170 support, this could signal to a shift of bearish structure, right? So now for the China A50 futures, well, it rebounded yesterday on Wednesday session, right? Driven by massive surge in the solar and also green energy following the reports that saying Elon Musk's delegation, right, is touring Chinese factory to partner on the US solar projects. So I think sentiment was further supported by the services PMI, which also accelerated to 3 months high, which beating the estimates, and also offsetting the gloom from the earlier weak manufacturing data and helping the index to ignore the tech, the AI sell-off, in which in the US that I have mentioned earlier, right? So do expect for the green energy theme to dominate the trade today, right? I think funds are aggressively rotating out from the AI and also the tech, right, and into solar, stocks to chase on the Elon Musk narrative. So look at the charts right here. I think the support of 14,700 seems to be strong after it has rebounded steadily, and I think a further propel could bring this A50 futures to test the immediate resistance of 15,500 points level, right? So to look at the WTI crude oil futures, well, yeah, it rebounded, continued to rebound to close at $64 US dollar level, right, on Wednesday session as the geopolitical tension reignited. I think the US Navy shot down an Iranian drone and reported that the Iranian vessel harassed the US tanker, shattering the peace talks narrative as well. So I think buying was further fueled by the bullish inventory data and the API inventory reported a massive 1 million barrel draw, and while the official EIA data show a smaller draw, and also I think the overall picture confirmed that the supply are tightened due to the some disruption, right? So expect rally to challenge up higher in today's session, and I think the war premium is back, and the OPEC Plus, reaffirming cooperation, the call yesterday, which to me right now, we are still holding a positive trading bias, eyeing for the 68 dollar level, together with 70 US dollar level, and our stop loss remains back at 58 dollar level for now, right? So looking at our Malaysia market, well, the KLCI retreated on Wednesday session to close at 1742.82 points as investors took profit following the sell-off in the US tech stocks, which also dampened the global risk appetite and hit local high flyers like the YTL Power, the Tenaga as well. But however, the FKLI remain sideways. Because of the banking stock remains solid. I think Maybank also surged to record high of 12.7 before cooling off at closing, right? Which also providing the foreign funds still holding into Malaysia core assets. So for FKLI, I think expect the market to consolidate somewhere around 1740, 1750. Right, we are still holding a positive trading bias, aiming for this 1790 points level, right? So sectarian movement was quite muted yesterday. Well, if you see here, the top gainers was coming from the energy and also the consumer stocks, sector, which also I think the movement is not that big, lesser than 1%, right? But however, we can see that the interest is coming back for the oil and gas stock. So I would highly suggest to follow the energy sector right here, and not only that, but you can see utilities as well as it is one of the best sector to look at, as it is usually lagging from the energy sector, right? So let's take a look at Burma's Auto. So I received a lot of questions regarding this Burma's recently, right? So now you see here, so from yesterday's session, right, it has jumped almost 6% and reach our first resistance at 68 cent. Sorry, 86 cent yesterday. And if the bullish momentum to remain steady, I believe that the next target should be at 92 cent level. So from my overall point of view, looks like the stock is now on its reversal move from bearish to bullish, right? So, and if you see here, the market has already formed a new high right here, which tells us that the downtrend has ended probably somewhere around December last year. Also, not to forget, I think there's this bullish crossover happen, which also signals us that the near term view is bullish. We have ATAG also. So from yesterday's move, right, it has rebounded by almost 6.25%. But the question here is, will it able to sustain this bullish move from the and it will form a bullish structure. So I think we that's the thing we should ask, right? So to me, I think the negative sentiment from the US side haven't subsided yet. So tech is still a little bit volatile to me. And if you look here, the bigger picture says that the downtrend is still there, and the moving average also didn't show any trend reversal to shift to a bullish move lah, right? So I think for now, can try to add this stock to your watch list before any shift in trend to happen, right? So moving on to our Malaysia trading stocks. So for today we have WTK. WTK. So the stock is on its breakout formation higher at 78 cent level on a strong volume. So with that, we expect the momentum to keep bullish, and the stock able to propel higher to test the next resistance at 83 cent, followed by 87 cents. So if the stock to clear below this 74 cent support, this could reverse its course and trend lower. Also, next we have Dayang Enterprise. So the stock is experiencing a breakout as well at ringgit 80 cent level. So if the stock to remain bullish, we expect the price to reach ringgit 90 cent together with 2 ringgit in the coming session. Also with high volume. So keep an eye at ringgit 70 cent level for any attempt of reversal. So for today, we have 2 breakout stocks, which is WTK and also Dayang Enterprise, right? And lastly, for the FCPO, where it closed almost flat yesterday to close at 4,225 ringgit on Wednesday session, as the market entered into the holding pattern. I think gains from the soybean oil was erased by the strong ringgit as well, which continued to cap the upside potential. So I think traders are still reluctant to chase prices higher until next week's MPOB report, although early estimates suggest that the production fell, but it still provides a strong floor for the FCPO, right? So for now, we still keep our positive view unchanged, positive bias unchanged, right? Targeting for the 4,400 level, together with the 4,500 level, and we keep our stop loss remain strong at 4,100 level. So that's all for me. I'll stop here. Pass the floor to the next presenter. Thanks everyone, and happy trading.
All right. Good morning, everyone. So today we have a company update on Binastra Corporation. Yesterday, they announced that they secured a 503 million ringgit data center project from Exim Sri Permai. And this is the first project for FY27, and also the 6th data center project that Binastra has secured to date. And this, based on our estimates, this data center, could have a capacity of between 10 to 20 megawatts. And given that this latest DC job only entails the main structure and building works, we do not discount the possibility that Binastra could also secure the M&E portion for this same data center, given that the previous 2 data centers saw the award of the main building works first before the M&E portion came out later on when the project had commenced. So in terms of its outstanding order book, it has reached about 7 billion ringgit, which is more than enough to. We believe that it could make Binastra very busy for FY27 or even beyond that. And we think that with LF Lanson being 51% owned by Binastra, this could enable the group to be well versed in handling some M&E portions, particularly on the cooling systems for data centers. So, all in, we make no changes to our earnings estimates, given that the latest job win is within our FY27 job win target of 3 billion ringgit. maintain buy with an unchanged target price of RM2.72. Further catalyst would be if Binastra were to secure any more new jobs, especially in the Johor Bahru area. So that's about it today for Binastra. I'll pass on the floor to the next speaker. Thank you.
Hi, good morning, everyone. So today I'll be presenting a company update on UOA development on behalf of Corwin. So we maintain our buy call on UOA development with a higher target price of RM2.10 from RM2.08, implying an 11% upside alongside an attractive FY 2026 forecast yield of about 7%. So our positive view is driven primarily by strong reception of UOA Development's maiden JB project, which is called Etera Residence, with a GDV of RM800 million. The project has been very well received during its preview phase, with Putra units almost fully taken up. So after factoring in the 25% early bird rebate, the net selling price is below prevailing market prices for primary launches near the RTS links, which make it highly competitive. Properties near the RTS link continue to sell strongly despite concerns over incoming high rise supply. So we believe that Etera's success is supported by 4 key factors. The first one is strategic locations. Second is the attractive rebate structure. The third one is a covered walkway directly connected to the RTS stations. And the last one, with the fourth, is the UOA development's strong branding. So with rebates, the average selling price works out to be about RM1,100 per square foot, with affordable down payments and partially furnished units. So most of the Putra units attracted local investors, Singaporeans and Malaysians working in Singapore. And the expected official launch is in the first quarter of 2026. That is when the rebates will be reduced. So in Klang Valley, the Bamboo Hills also continues to perform well following the strong take-up. The UOA is raising prices for remaining the Putra units to around RM850 per square foot from RM650. So this reflects UOA disciplines and strategic launch strategy, which has consistently supported price appreciations and buy confidence. So on earnings, we raise our forecast. We raise our earnings forecast from FY 2025 to FY 2027 by 13 to 15%, driven mainly by strong 9-month 2025 results and robust sales from Etera, which will be the key sales driver in FY 2026. We also increases our dividend per share forecast to 13 cents for FY 25 and FY 26, which imply 100% payout ratio. Supported by UOA RM1.7 billion net cash positions. So in conclusions, based on our updated RNAV and unchanged 30% discount with a 2% ESG discount, we raise our target price to RM2.10 and we reiterate our buy recommendations. That's all for me. I pass on to the next speaker.
Thank you, Hilmi. I guess I'm the last speaker today. This is a company update for UUE following their analyst results briefing yesterday. We are keeping our buy call here, 64 cents target price, which is pegged to 17 times FY 27 price to earnings. I guess key takeaways here is that management views that the company's operational hiccup in Singapore as temporary. If you recall, in third quarter of FY 26, right, which is the recent quarter, despite a 79% Q-on-Q rebound in Singapore revenue, it actually remained loss-making at about 50,000 ringgit for Singapore. Second quarter wise, it's about 250K losses. The weak performance actually stemmed from persistent permit approval delays. But what we gather is that activities has actually begun gaining pace in November, right? So the last month of third quarter. So the slowdown in third quarter also weigh on the demand for its HDPE pipe products, resulting in a utilization rate of about 50% in third quarter. Though the utilization has actually improved to above 60% quarter to date, which is the December and January month, as project activity actually recovers. Back in Malaysia, management is actually very encouraged by the 51 million quarterly contribution, and they continue to prioritize KPI delivery for Tenaga TNB projects to secure the 2+1 extension, which is to be supported by larger local workforce as well as increased subcontractor engagement. So looking ahead, for fourth quarter wise, that it should see stronger Singapore contribution as project momentum improves. Although this month alone, there's a festive season downtime of about 1 to 2 weeks, which may cap upside. And in terms of tender book, that remains healthy at about 300 million. Note that this tender book doesn't include projects that are they get from their main exclusive partners. So roughly half of Malaysia's tender book, which is at around 141 million of that 300 million, roughly half of that is tied to a transmission job for a solar farm, which includes the cables as well. And the remainder comprises of smaller factory and end user contracts. Singapore-wise, the tender book stands at around SGD 51 million, which translates to around 160 million ringgit. That actually includes a direct tender to Singtel for HDD works. Meanwhile, outstanding order books actually stand at 508.5 million, of which 62% is actually TNB related projects. And in terms of their new venture into solar, I guess the tone here is that solar landscape remains challenging. That is weighed down by the shift from NEM to solar ATAP PPAs. There's also panel price volatility following China's VAT removal, and we are seeing higher silver prices as well. So management are actually expecting muted contributions from this going forward, and they actually implemented immediate headcount reduction to contain losses and have adopted a wait-and-see approach. In terms of valuations and forecasts, I think our valuations are more aggressive compared to management guidance. Revenue guided is about 250 million for next year, PAT of about 33 to 35 million. Where we are a bit more aggressive mainly comes from stronger contract replenishment, but we do factor in lower project margins. And for now, we are leaving our estimates unchanged. Our target price of 64 cents, that is actually derived on a semi-diluted basis. That assumes the 912 million shares outstanding, and actually includes the close to 90 million ESOS options that was granted in third quarter. On a fully diluted basis, I think including warrants, our target price would fall to 57 cents. I think key risk remains the same. Number one, failure to secure new contracts, and number two, it's the delays in permit approvals. So that's all from me. That's all for today as well. See you guys again tomorrow at Morning Kappa at 8. Thank you.